Thank you for joining me. You are listening to Mike Hamilton of Trade the Easy Way. And so, as the US come back to their desks after their long Independence Day weekend, and we get the sort of general gist of what the Greeks are voting for, then we can start to plot the week ahead and look forward to some interesting moves. Pretty busy week. Obviously, we've got the Greek issue in the news, so we'll get some initial indications of market appetite when the European markets open on Monday. I'll obviously go into a little bit more detail about that in a few moments, but overall we've got Aussie rates, UK rates, FOMC on Wednesday, so Fed minutes on Wednesday, UK budget Wednesday, and then it gets pretty quiet. So it's a fairly busy week. So my plan for this week is to sit tight on Monday and go right up to the first hour of the US market, at which point I will then look at the Sunday open levels. I would look at how the European market opened on Monday and what the US reaction is on Monday as well. And at that point, I'll start to do a couple of calculations and then get a feel for the potential for moves in the week. So you're looking at the Nasdaq, and at the moment, the Nasdaq has had this three-wave downward move, and you can see I've got the box at 4.3 to about 550, and then you can see we are just at the moment not holding, and these moving averages are sloping and coming down. What I'm hoping for, what we're going to get could be two entirely different things. I'm hoping for this market to come and do a proper gap fill at 44.88, and all indices, particularly US and UK, are very, very similar, and of course the DAX as well. And so, but it was very range bound week. I mean, the indices in particular just couldn't give us any kind of real direction. What I would say is, I think one of the main keys to last week's range was that Sunday open. This little bar here, this chart actually measures the Sunday open. Not all charts do. If you look at the Sunday open and compare that with how we reacted to the week, we just spent a whole week. This goes for all US and European indices. Spent the whole week just ranging around that Sunday open, and it's possible that could be the way we behave this week as well. Let's move across to the DAX, and then we'll compare the DAX with the Euro. DAX had a better week, but not much. The weekly open was down here on the daily 200. And we closed narrowly above it. So the open was 11,060 and we closed just 40-50 points above that. So it's pretty pathetic. And you can see on the one hand we've got very bullish moves from last autumn. We pushed up, usual pullback, legged up, little pullback, then got an impulse run. And here we are selling, rejecting, and pushing back down again. And here we're in this apex. What I think will happen is, I think the reaction to Greece overall is surprisingly positive. I think the markets are actually holding up. Well, let's face it. The data that's coming out of main parts of Euroland and the US is still extremely positive. So Greece, although it is a $325 billion euro debt, which the Greeks are going to take at least one generation to pay, if not more, assuming they stay in the euro, that is, then this market is actually still holding up and could still punch higher. So similar story. I will wait for the Sunday open and wait for the Monday reaction and just see if there's any sort of inkling as to where the main momentum is. At the moment, these indices just do not have momentum. Path of least resistance is down, but otherwise there's no real telling at this stage. So you better just keep your powder dry until at least late into Monday. Right, currencies and pound US. You can see the weekly chart on the left. So 2 weeks of selling coming off the weekly 200. So the path of least resistance at this stage has to be down. It's a pretty weak week. So 156 is a retest of that fib level. Could see us. Now we've got Fed minutes on Wednesday. Could end up hanging around a lot, but and UK rates and UK budget. But it looks to me as if we could just slide down and come right back down to 150, and who knows, further down. That's a 3-wave reversal pattern up there. And unless we come down to this weekly 200 at 154 and then start to hold, I don't see that holding at this stage. I think it looks as if we're going to see continued strength in the dollar. Euro US fared better. The weekly chart actually had a positive stopping bar, but only with inside big sellers bar. The daily, however, just about managed to close above that fib level. You can see my fibs are on the 2015 range at the moment. So what do I think is going to happen? It's a 3-wave, whereas the pound has had a 3-wave reversal to the downside so far. This has had a 3-wave pullback. It was very, very heavily sold from summer last year. And if this pans out, if we can hold this level here and close above 120, then I would expect to see 115. If we close underneath it, if we come in and bump into that 50 EMA and can't hold, then I would expect to see 105 and lower. So you've got to bear in mind we're under the 20 and the 50. We're under the 50% fibs. So a fade of, in other words, a bounce off of that 50 EMA could be a potential, but that was overall a positive week in what was a tough week for Euroland. So for that euro to hold up in a week like that, I think is a sign of relative strength. So what I would say to you is don't start picturing the trade. Just because there's a lot of news out there, we need to shut ourselves off to the news, always, not just on this occasion, but always, and just wait and see how these markets open. And in the room, I will be looking at a specific range that we get and then plotting the potential direction for the week on the back of that. Let's just cross the euro yen. Euro yen is sitting on that 50 and 100 on the daily with the 20 EMA above it, and again we actually close above all these 4 moving averages: the 20, the 50, the 100 and the 200. So there are positive signs on the euro yen. One of my favourite charts is this euro CAD. Positive week, but I just wonder if we are going to have a little sort of relief rally and then roll over. Oil is very weak. The CAD tends to react to the direction of oil, so it could be that this is we can close above 140, 141 and then push back up to 150. My preference is on the short side, because I think we're going to see a copy of this. I think we're going to see symmetry from here, where we had a nice big bar here, then spent a few weeks pushing up into this resistance level and then rolled over. So if we have, so we've got a nice big bar here, if we end up just pushing into this somewhere around here, then we could just roll over. So I'll come back to you about that one. Aussie's had a really tough time, so I'm just steering clear of the Aussie CAD. It's in a tight range, and I thought all this price action last week was going to sustain that and hold out, but they just rammed it into that resistance level, and here we are back testing a hammer-like bar down here with a stopping bar in the weekly on the left. One of the strongest charts out there on Friday, this was just phenomenal. This went 300 or 400 points, I think. Oh, maybe not as much as that, but it was certainly a big move. Let's see, 430 to 800. Yeah, we got close to 400 points on that pound Aussie. So the commodity pairs are very weak. The commodities are just not holding up. Bit of a hangman spinning top on the weekly under that 50% fib. So what I think we might hang around, dip into 204, back to where we broke out from, and then get another leg up to 210. And what else have I got on my charts? Just a quick look at pound yen, and I'll leave it there. So pound yen is at 2 lower weeks, and we've got this major support down here on that line. At which point, so 18950 area is a huge amount of support, and we've not done a proper gap fill. So if we can come down there in the early part of the week and then start to hold, yeah, I would look to buy that. Sort of rolled over here. We had a great week, a great few weeks up here. Roll back over and then push back up. So can we do that again? Well, I'm bearish on the pound US. I mean, it could be we just come down here and just keep going. Test the 200, bounce back to resistance and keep going. So 192 is a massive area of resistance, which is a retest of that star. Okay, I'll talk about my latest interesting stock sectors and stock selection on Traders Roundtable. If you're not in that, then drop me a line and take a 14-day trial and then see what we get up to, see how we measure up our charts, okay? So take it easy. If there is extreme volatility, you are much better off just standing back and letting it play out, and then we can pick our spots as the week unfolds. Enjoy what's left for your weekend, and thank you for joining me.